Hello, this Friday morning. My name is Ayodele-Bamisaiye of Dexteritas Professional Corporation, and today we are here again talking taxes on Finance Friday. It's been an amazing tax season so far, serving clients both within the community and within my client base. We've seen a few trends, we've seen a few perspectives, and how CRA has responded to certain things. But we're just about halfway through the tax filing period. There's still another full month of filing to go. But just said I should come to you today and just talk about a few things that are interesting to me. But before we get right into that, right, I'd like to shout out the Financial Empowerment Initiative and their tax clinic that's happening in Calgary and Edmonton. In Calgary, it's happening at the Calgary Full Gospel Church on Tuesdays, Wednesdays, and Thursdays. And on Mondays, it happens out of our offices here at Dexteritas Professional Corporation. In Edmonton, the Africa Center has been our amazing host on Thursdays and Fridays, and the Orange Hub downtown at the premises of the BCW has been the locations for Mondays and Tuesdays. Edmonton kind of gets a break on Wednesday, and Calgary, well, kind of get a break on Friday. But that's where the tax clinic is at the moment. This month of March has been an amazing month celebrating our women in enterprise. And Startup Court, which I'm part of, was able to put something up on the 20th of March. We had some awesome speakers, and it was a great evening. You can check out Startup Court's LinkedIn page, as well as the website, as well as the Africa X Media website, africaextended.com, for some of that past information. Founders Lounge, which is that program, will be coming back to you sometime in April, third Thursday in April to be precise. So that's all I got as far as happenings in my world are concerned. So today we are talking top 10 missed tax credits and deductions, and I'm going to start from number 10. And some of them, you won't be surprised, some will really get to you. So going right into our top 10 missed credits and deductions. Number 1 on that list, number 10 on that list is tuition credits. People kind of forget that they've gone to school and they paid all this money. So they just kind of forget to collect the T2202 from the school and include it in their personal tax returns. And that always contributes to what is known as the federal non-refundable tax credit. So it's important. If you've gone to a post-secondary institution and spent some money, whether it's for one single course or whether it's an entire program over a period of time, ensure that you obtain and you secure your tuition credit document and include that in your personal tax return. The moving expenses, yes, people kind of forget when they move that there's a tax implication to your move, right? If you are moving from one city to another to be closer to a job, you move at least 40 kilometers, you're allowed to claim the cost of that move in your next tax return. So if you've moved for jobs and you've moved up to 40 kilometers, actually, if you moved for work, school, or business, and you've moved up to 40 kilometers, you're allowed to claim the cost of that move on your personal tax return. So take a look at that just in case you've missed it. Now, if you have a member of your family that's challenged, whether physically or mentally, there's a disability, either they are legally blind or they're in a wheelchair or something like that, that person is entitled to secure what is known as a disability tax certificate. That tax certificate gives them the opportunity to get significant benefits that will reduce the tax bill of whoever claims or whoever utilizes a disability tax credit. Now, how would this work? Whether the individual who is challenged uses the credit themselves, or the credit is utilized by their spouse or parent, the point is that if you are in a physically or mentally challenged situation, you need to secure a disability tax certificate and access benefits that are available to you from the government. So that's something that you need to know. Union and professional dues, that gets interesting. People just kind of forget because those things come off your paycheck and it's just like a little bit every month and you don't really remember. Yes, they have a tax benefit. So make sure you include them in the package that's going to your accountant when you are going to have your taxes filed. Number 5, that's the home buyer's amount. I know it's interesting to know that you would put all that money into buying a house and then suddenly you will forget that there's a benefit. The benefit of this one is one of the best around in the business. It's $1,500 reduction in your tax bill for the year. So you do not want to leave that on the table. If you're buying a home, first time you're buying a home, that allows you to get 15% of $10,000 taken off your tax bill for that year. And that is money that's good in your pocket. Another one, I find it hard to believe, but this is real. Some people forget to include their RSP contributions in their tax return. It's hard to believe that because that's one of the best ways to save on taxes. Make a contribution to your future self. But many people just kind of don't remember to include it. So if you've made contributions to your RRSP, ensure that your accountant is aware and he includes that in your tax return. And if you're filing your tax returns yourself, I guess the software is kind of going to remind you, but hey, don't lose the slips. They're important. Another one I want to bring to your attention is medical expenses, particularly premiums on health insurance that you pay off your paycheck. So when there are employers who are able to make arrangements for health insurance premiums, but they're not able to cover the full cost. So employees are required to cover a portion of that cost of their paycheck. Now, if you do not remember to include that, that will be difficult. That will be putting yourself at a disadvantage. So if you pay health insurance premiums off your paycheck, whether for vision, dental, or any other kind of health insurance premium, ensure that it is included in your tax return. It's a benefit. You need it. You paid for it, so use it. No, people don't forget their charitable donations, but charitable donations are very, very, very important in the personal tax equation. Charitable donations give you some of the best deductions and increase your federal non-refundable tax credit. That number, you want it to be as big as possible. Yep, that's exactly what you want. You want that number to be really chunky every year. And one of the easiest ways to contribute to it is to make a donation to a registered charity, a Canadian registered charity. So if you're making donations, please do not leave them out of your tax returns. I've heard people say to me, oh, I gave the money to God, so I shouldn't be getting a benefit for it. No, it's not God giving you the benefit. It's the law. The law says that if you make a donation to a registered charity, the charity is allowed to give you a tax receipt, and that receipt can be claimed on your tax return. So every time you give money to a registered charity, provide them sufficient information to be able to send you a tax receipt. They are very eager to put that tax receipt in your hands. So please be very eager to use that tax receipt on your tax returns. So far, so good. That's been number 10 all the way to number 9. And I want to give you the number one. The number one missed deduction. So many people miss this out. Everybody's always like, oh, I didn't get all my receipts, so therefore I cannot claim all the expenses in my business. Then why don't you put a system that ensures that you get all your receipts in place? That's the question. So the number one most frequently missed deduction that I want to draw to everybody's attention is unclaimed business expenses, right? You have a business, you're spending all this money to make money, but somehow you are not able to claim the money you spent because you have not documented it properly. You've not saved the receipts. It's not a good place to be because you're paying taxes on money you should not be paying taxes on. Hello? Hello? I hope you get me there. So put something in place that helps you to capture all of your receipts, whether you are using an accounting platform like Xero or QuickBooks or Wave or Zoho or any of the other digital cloud platforms, or choose to use a spreadsheet and then take pictures of your receipts and save them in a OneDrive or a Google Drive or on your iPhone, iCloud, something, somewhere. Just save it somewhere so that it's easy to retrieve. When you do that for yourself, you are saving yourself a bunch of money on taxes. So a quick rundown of the 10. From number 10, tuition tax credit. Number 9, moving expenses. Number 8, the home accessibility tax credit. Number 7, the disability tax credit. Number 6, union and professional dues. Number 5, the home buyer's amount. Number 4, RSP contributions. Number 3, medical expenses. Number 2, charitable donations. And wow, the most missed of them all, unclaimed business expenses. It's been an amazing Friday morning for me today. I have enjoyed doing this. I hope you learned a thing or two from this. Olutoyin Ifeolu, great to see you. It's been a minute. Thanks for joining us. Omoti Nyore, I greet you. Thank you for joining us. It's been an amazing Friday morning. A busy day ahead of us here at Dexteritas, tax returns to prepare, as well as the community to serve, as well as our clients to serve. So we're looking forward to an amazing day, and I wish you an excellent Friday. I know the weather is less than the best out there, but keep the sun in your heart shining and have an excellent Friday. Bye for now.